Okay guys, what is going on everyone, and welcome back to another trading video. So today's video, I'm going to give you guys a brief introduction into my strategy, how I position myself in the market, is what I look for, how I execute a trade, and giving you guys just a short introduction into what I look for in the financial market. So this strategy, okay, is a very simple strategy that I have been using now for multiple years that has been giving me great returns and consistent prop firm payouts. So before we jump into it, guys, you know my channel is mainly based around psychology and mindset. I truly believe, without a strong foundation in psychology, if you cannot control your emotions, then it doesn't matter what trading plan you have. You could have a great strategy. You could have a strategy that has a 90% success rate, but if you cannot control your emotions, then obviously you will never be able to execute your trading strategy. And also, if you do not have a strong trading plan, a strong trading strategy, if you do not know what to do and when to do it, again, your emotions will not be in check. So it's about having self-mastery, self-control over both, okay? You need the emotional discipline, but you also need the technical discipline as well. So in this video, guys, I'm going to share with you guys one of my favorite trading strategies, one of my favorite entries. Again, I'm not going to dig too deep into it because there's multiple technicals, there's multiple variables that you have to apply. But hopefully by the end of this video, you have a better understanding in how I position myself in the market, what I look for, and sharing with you guys one of my favorite trading entries, because I want to start doing this as a series. I have multiple trading strategies. I have multiple entries that I use in the market, but definitely the one I'm about to share with you guys now is simple, effective, and I have been using it for years. That has been giving me great returns. So let's jump into it. Okay guys, so before we jump into it, you must understand there are multiple strategies, there are multiple ways that people like to position themselves into the market, okay? There are hundreds of strategies, there are hundreds of theories and philosophies that you could apply in the markets. For me personally, back in the early days, I was always getting caught up into jumping from strategy to strategy, jumping to the next shiny ball. So this is why, it's important. Once you found something that works, it's about blocking out everything else and doubling down on what works. Okay, some people trade different concepts, but for me, I keep it simple, I keep it clean, I keep it effective. Once you found something that works, there is no right or wrong in the market. If you are making consistent money, if you are pulling out consistent payouts, then that's a win. It doesn't matter how you are doing it. Whatever you are doing, double down on that, okay? So that's the one thing I want to give you guys before we jump into the strategy. If you have a strategy, stick to it. Stop jumping from shiny ball to shiny ball. Okay, so rant over, let's get into it. So this first trading strategy, okay, I like to look for ascending and descending triangles. I like to look for overextended plays, okay, where the market is slowly decelerating and slowing down and consolidating. We've had a strong bearish or strong bullish run, and price is starting to stall, it's starting to hesitate, and we are looking for the breakout to the downside or the upside. So ascending triangles and descending triangles, they repeat on multiple time frames every single day. There is an abundance of these patterns that occur. It's about finding the high probability trades and looking for a great risk ratio and a great return. So let's jump into the charts. See on the right hand side, I have some examples, okay? Like I said, these ascending and descending triangles repeat on multiple time frames. As you can see, we have the daily. I'm going to share with you a daily example, a 4-hour example, a 1 hour, and a 15-minute. Because as always in the market, there is always abundance of opportunities. It is about filtering them out and finding the ones that suits you, that suits your trading plan, that suits your trading personality. For me, I am an avid day trader. I don't want to do swing trading. Swing trading for me is too long, it's too boring, it's too tedious. I like my trading personality. I like to be in and out the markets, maybe over a day or two, catching those quick explosive moves, looking to bank, 1, 2, 3, 4% trades, getting in and out. So as you can see, guys, this is pound New Zealand dollar. This was a live trade that I executed on the 24th of January. So it's a very recent trade. So my first objective, the first thing I'm looking for when I'm looking for these patterns is a overrun and overextended play that is backed by some support, resistance, supply, demand, whatever you guys want to call it, and looking for a potential reversal area. So as you can see, we've had a nice bearish run and we are looking for some sort of support resistance to indicate to us that we will have a reversal, a change of direction in price action. So you can see here, this is the daily time frame. So as you can see, we've had the run, we've had the breakout, we've had the pullback, continuation to the upside. So looking for price on a higher time frame, on a swing perspective, price could continue going higher. It's a simple break, retest, continuation. Okay, so that is the higher time frames done. So I know around this area, around this section, I'm looking for some sort of trend reversal. If we jump into the 4 hour time frame, let's clean it up a little bit. As you can see on the 4 hour, what are we looking for? We are looking for a simple, clean, descending triangle. And what do you see? Okay, we've had the pullback to the support resistance area. We're looking for the continuation to the upside from here. Price comes down. We have our 1, 2, 3, 4, 5. And what happens? This is the area we are looking to go in. So there's two scenarios that could happen here. Number one, we could have a break to the downside. As you can see on that 4 hour, that's a very bearish 4 hour candle. What could happen is price could continue going to the downside, or the second scenario is price explodes to the upside. And for me, I'm always looking for a heavy rejection around these areas. So this was on the 24th of January around 6 to 8 a.m. UK London session. And for me, I always execute my trading positions in London or New York sessions purely because of the high volume, the high volatility. You don't want to be executing a trade in Asia because there's not much movement, there's not much volume. So as you can see, price came down, rejected, taking out previous lows. And this is where the bullish momentum came in to the upside. For me, again, my trading personality is day trading, so I only take it to the top of the pattern. Obviously, if you're a swing trader, you could push it further. As you can see here, this was a Friday anyway, and with my FTMO accounts, I'm a day trader, so I cannot hold trades over the weekend. And to be honest, I wouldn't want to anyway. Again, like I said, re-emphasize the point, I am a day trader. I like to catch the in and out positions. And this was a 2% trade that I call. Okay, it's simple, it's clean and effective. Breakout continuation to the upside on the higher time frames. We are looking for a descending triangle. 1, 2, 3, 4, 5. Simple, clean, effective. Okay, price is slowing down, it's squeezing. We're either going to have a breakout to the downside or a breakout to the upside, which obviously happened here. And like I said, if you are a swing trader, you could have been holding this trade up to the recent highs. But for me, in and out trade, a nice 2% bank. So this is an example on the 4 hour time. So this is an example. This is a bullish descending triangle example, which was very recent. So let's jump into another time frame, which is the 1 hour. So this is Euro Japanese yen. So this is Euro Japanese yen, okay? And you can already see it, okay? I've already marked out for you guys. This is a short example on ascending triangle, and this is on the 1 hour time frame. So like I said, these patterns repeat. They repeat so much on all time frames. The 15-minute, the 1 hour, the 4 hour, the daily, the weekly, even the monthly. And it's about looking for these setups, okay? So as you can see, we have a clean, correct ascending triangle. 1, 2, 3, 4, 5. Taking out recent highs. London session, okay, high volume, high volatility, stopped just above, taking it down to the 4 hour 50 EMA for plus 3.6%. Okay, I like to trade my positions down to the 4 hour 50. My trading personality is day trading. Okay, I don't want to be holding trades that long. This was 3.6% in a couple of hours. Clean, quick, fast, just the way I like it, okay? So if we jump on the higher time frames, again, you're looking for an overextended play. Are you looking for a position of value, right? So you can see the 4 hour, we've had a nice bullish run. Okay, price is nicely overextended. Plus we have some support and resistance to back it up, right? You can see multiple touches here. 1, 2, 3, 4. So UK London session, I am looking for these pairs. And that's the most important thing. I'm only trading these patterns in London or New York session. Otherwise, I'm not interested. I'm not interested in what happens over Asia because the volume's low. From the data I've collected, 9 times out of 10, they always happen in the London session. So you can see, again, price is squeezing, price is slowing down. 1, 2, 3, 4, 5. So what I'm looking for is price to come up, give us a new higher high, and then slam down. That's what we're looking for, the momentum coming into the downside. Because, obviously, yes, this could be a continuation, but I'm not looking for the continuation because the price is already overextended. So I'm looking for a pullback play. 4 hour 50, in and out, 3.6%, okay? So that is a short trading position. So let's move on to the 15-minute time frame. Okay, guys, so now moving on to the 15-minute time frame. This is Canadian dollar and Swiss franc. So this happened on the 17th of October 2024, and this was on the 15-minute time frame. Okay, guys, so Here we go. As you can see again, another perfect clean example. What do we see? We see price slowing down, decelerating and stalling. Price is getting squeezed. And what happens? We either break out or we reject to the downside. And this is another great example on the 15-minute time frame. What has happened here? So you can see, okay, price coming in, it's slowing down, it's squeezing. Price comes to the upside, it's looking like it's breaking out to the upside, but what happens? Momentum comes in, it's UK London session, we have high volatility, we have high volume, and what happens? Price slams down to the downside to the 4-hour 50 EMA. This is a 5% trade, guys, okay? Clean, simple, and effective. You know, you're banking 5% in a couple of hours, in like 3 or 4 hours. And, you know, you're looking for 1 or 2 trades like this a month, and you could be banking some serious good money, okay? So this is definitely one of my favorite entry styles that I like to get in. This is one of my favorite ways I like to position myself in the market, because it's simple, it's clean, it's effective. You know what to look for. Once you have clarity on the charts, once you know what to look for, once you know what to identify, then your emotions and your trading plan and technicals can come together and be one, okay? Because like I said, the emotional side is very important, but if you don't have the technicals, if you do not have the strategy, then it's also very challenging. So I hope you guys can start to see now that these trading patterns, these ascending and descending triangles start to repeat, and they repeat on multiple time frames, okay? And it's just about identifying them, looking for the breakout, looking for the rejection, looking for the momentum to break to the downside. So that is the short-term one. Let's jump into the daily time frame now, okay? Okay, so this is the US dollar and Swiss franc. So as you can see, another great example. It's a little bit choppy on this daily time frame, but you can see the point. Okay, we have the bearish move to the downside, and what happens on the daily time frame? We are stalling, we are slowing down, we are decelerating. We have one, two, three, four, five. And as you can see on this daily candle here, a lot of people were probably thinking, you know what, it's going to the downside. The price is going to continue, break out, keep going to the downside. But 9 times out of 10, what happens? It's a fake out. Okay, we take out the lows. Price looks like it's going down, it's breaking out of the pattern, but what happens? It rejects and it goes the opposite way. You know, for me personally, I wouldn't take this trading position because I am not a swing trader. I'm more about the 15-minute, the 1 hour, the 4 hour, looking for those quick in and out plays. But just to give you guys an example of all time frames, these patterns repeat on multiple time frames. As you can see, this is about 20 candles, so you'll be looking at about 3 weeks in a trading position. And my personality style is not about swing trading. I'm more about the day trading. So another example on the daily time frame. So as you can see, okay, you can start to see the point now. These trading patterns repeat, and they repeat consistently on multiple time frames. You know, I've showed you the 15-minute, the 1 hour, the 4 hour, and the daily. As a day trader, like I said, I'm always looking for the short-term plays. But this trading strategy, this trading style is very simple, it's very clean, and it's very effective. It's produced consistent payouts, and I've used it for years now, okay? Okay, guys, so that is my first trading strategy video breakdown, okay? Obviously, there's a lot more I need to share and break down with you guys, how to get the day trading entry, how to manage the trading position, what to look for. But this is just a brief introduction into what I look for. One of my favorite high probability strategies that has produced, again, consistent payouts, consistent returns, which is very simple and effective once you identify your mindset and identify your eye to find these. So that is today's video, guys. I hope it all made sense. I hope you got some value from it. Let me know what you think of the video, the good, the bad, in the comments. And yeah, one of my goals, one of my objectives this year is to do more technical analysis, because again, my main focus is on the mindset, because you truly need both. You need the mindset, you need the technicals. If you have a great mindset, but you don't have a good strategy, then you're not going to make any money. But if you have a great strategy, but you cannot control your temptation, your mindset, your caveman brain, then you are not going to last. So that is today's video, guys. I hope it all made sense. I hope you got some value from this. Let me know what you think, the good, the bad, as always. I hope you're having a great weekend. I hope you're having a great training month. Thank you guys for watching, and I'll see you all in the next one.